Good morning, ladies and gentlemen. My name is Fernando Rivera. I came from Bishop O'Connell High School in Virginia. Today I'm going to present EXXONMOBIL Corporation with our recommendation in long-term buy. Right now, the price as of March 3rd in 2025 is $117 per share. My target price is $150 by 2030. Let's go with the company overview. The market cap $510 billion, the enterprise value $536 billion. The 52-week range goes from $103 to $126 in 2024. Then the other statistics, we can talk about them in the financial analysis. Now let's go with the actually company overview. Now the headquarters are in Houston, Texas. The CEO is Darren Woods, one of my favorite CEOs besides Warren Buffett and John D. Rockefeller, and we're gonna talk about him later. Of course, ExxonMobil is a large cap business, one of the most profitable large cap stocks that you can buy right now. They own more than 21,000 service stations worldwide with more than 61,000 employees. Exxon, of course, is one of the leading companies in the US in the oil sector, holding a global market share of 13%. In 2024, we're above their competition like Chevron, Shell, and Total Energy. The company managed also approximately 3% of the world oil production and 2% of the total global energy supply. Now let's go with the industry overview and competitive positioning. The oil and gas industry was valued at $4.2 trillion in 2024. It is expected to grow at a CAGR of 5% in the coming 5 years. The demand for affordable energy is expected to grow in the coming decades too. The OPEC, the Organization of the Petroleum Exporting Countries, forecasts a rising world oil demand by almost 1.5 million barrels per day in 2025 and an additional more in 2026. The competitive positioning, Exxon controls almost all the American sector with a sales percentage of 40% in 2024. They have been in the market since 1870, succeeding the original and only Standard Oil legacy made by John D. Rockefeller. Exxon also holds a long-term rights to oil and gas reserves in over 60 countries and is considered a wide mode company. The Porter's five forces. XOM bargaining power of customers is low since XOM has already a base of clients including governments and corporations. Their intensity of competitive rivalry is moderate to high since XOM is competing against other large cap companies such as Chevron, Shell, and BP. Their bargaining power of suppliers is moderate since XOM depends on specific suppliers. Their threat of substitutes is moderate since XOM is also getting pressure from advanced renewable energy, EVs, and government initiatives promoting clean energy. Their rate of new entrants is really low since entering now the oil industry will be really hard. It will be more harder to get in XOM level since they will need a lot of money, a lot of time. It will take decades to get into XOM level. So it will be the threats of new entrants really low. Now let's talk about the next slide. Revenue drivers and investment thesis. Let's go with the revenue drivers first. So Exxon gets the majority of their revenue from the upstream, that is the exploration and production of crude oil and natural gas. They also have downstream and petrochemicals and especially products, and they are investing right now in renewable energy, and we're gonna see that later. Investment thesis. The company plans to invest up to $30 billion toward low emission projects between 2025 and 2030, focusing on reducing emissions from both operation and third-party customers. The company achieved a net production of 4.3 million barrels of oil per day, making a successfully 16% increase over the previous year. As you can see here in the picture, in 2025 project startups, they're making new projects to grow their income and their earnings, with the potential earnings contribution in 2026 from these projects of more than $3 billion. Now let's go with the analysis. So Exxon has a total revenue of $340 billion with earnings of $33 billion, a little bit less than in 2023. They have an operational margin of 12%, a return on equity of 4%, 14%, reflecting a strong value generation for shareholders. Their cash flow is really good. They have $55 billion in 2024, the third highest in the past decade. They have a free cash flow of $30 billion and a debt reduction of $5 billion. This is really gonna help long-term investors since the company is reducing their debt. They have a current ratio of 1.3, a long-term debt to equity ratio of 12%, and the growth of the company is really good. They have an earnings per share of $7 in 2024, a dividend yield of 3%, a payout ratio of almost 50%, maintaining a healthy balance between dividends and reinvestment. Dividend growth history really good, 42 consecutive years of annual dividends increases, and dividend growth rate of 4% in 2024. You can see here the future expectations for the company in the next 5 years in terms of financial analysis. And let's go with the next slide. So before we get to the valuation, I want to talk about this. As you can see here in the pictures, you can see the financials over the past 5 years of Exxon. You can also see the chart that is important since Exxon surpassed all their competition in market capitalization values. And as you can see, there's a big difference between the companies and also all the financials that they have. Now we can go with the valuation. The valuation analysis. Based on a deep analysis of EXXONMOBIL, I recommend a buy rating with a target price of 150 per share by 2030, which represents a 27% upside. This valuation is supported by the DCF model, utilizing a 10% discount rate and a 4% terminal growth rate. The model estimates a growth trend in cash flow. I was using the Alpha Spread DCF base case model, estimates XOM fair value at $154, indicating that the share is currently undervalued by approximately 23%. Also, the earnings per share of Exxon is 7.84 and the PE ratio of 15, giving a current intrinsic value of $117 per share. The projections indicates that by year 3, the intrinsic value per share could reach 129, aligning with Exxon average net profit margin of 9%. This net profit margin of 9%, if we put in the 5 years, it means that we can easily get the $150 per share by 2030 with no problems. Let's talk about the investment risks. The biggest risk and problems that the company has is the commodity price volatility. Since the earnings are tied to the prices of crude oil, natural gas, and refined petroleum products, these declines in commodity prices can be caused by economic downturns, global supply and demand imbalances, or any geopolitical tension. Another problem that the company has is operational risk. Since they're operating in over 60 countries, including politically unstable countries, that can affect the company's earnings or reputation. And talking about reputation, Exxon has faced lawsuits and criticism related to its historical stance on climate change. The company is improving in those areas since they're starting investing in climate change solutions, try to improve their reputation. So it's a problem that can be fixed in the next 5 years. You can also see here this SWOT analysis with the strengths, weaknesses, opportunities, and threats that the company has. And now let's talk about the management and governance. Exxon has been with the same CEO since 2017, Darren Woods. With more than 3 decades of global industry experience, he began his career with the company in 1992. Exxon has approximately 60% of the shareholders are held by institutional investors. The top 3 institutional shareholders are the Vanguard Group, owning at 10% of the company shares, BlackRock with the 7%, and the State Street Corporation with 5%. Then you have another institutional investors reparting in small pieces. The independence. Exxon board of directors consists of 12 members, 11 of which serves as independent, non-employee directors. There is also no red flags in the company with questionable accounting practices or poor capital allocation with the company. Now, let's talk about the ESG considerations. Generally speaking, XOM ESG ratings remain low compared to the other industry leaders. The company has been aware toward improving its environmental and social responsibility. They are planning to invest more in improving these considerations. The first one is the environment, the sustainable design. Exxon is trying to invest in scaling up its advanced recycling capabilities to reach 1 billion pounds annually. They're also trying to invest in emissions reductions, and they're gonna have a really big social community engagement. They have donated about $158 million globally and supported more than 1,450 charities in 2022. They also protect the human rights and has strong standards of business conduct across its operations. The corporate governance also is important here, since XOM operations integrity management systems ensures risk mitigation in health, environmental safety, and security across its sites. They also have a lot of diversity and board independence. As you can see in these pictures, you can see all the future projects that the company has with the ESG valuations. All the climate solutions and everything is here. Now let's go with the artificial intelligence. How does the development of artificial intelligence impact opportunity or risk to your select company? So Exxon can use AI to lower expenses and downtime in upstream operations. AI can help a lot ExxonMobil in the future, and we're gonna see this probably in 5 years. They're gonna be talking about this. Investors are gonna be talking about this. So I think it will be good integration for the company if they are trying to innovate in new technology that it might be AI.